Welcome to Markets Now. I'm Michelle Rook with Jim McCormick with agmarket.net. And it was a mixed day of trade in both grain and livestock futures. And let's start off talking about soybeans. We had a pretty good correction today, Jim. And, was that just a function of some of these rain chances that we're seeing in Brazil?
100% what it was. Early in the week, Michelle, we saw some support coming in on the drier forecast and meal market leading us higher. As we wrap up the end of the week, there's a little bit more confidence of the rain falling next week. The amounts are still a little bit debatable on which model you want to look at, but there is gaining confidence there is rain on the way. That led to a little bit of a liquidation. The real question, I think, coming out of the holiday week next week is going to be what happens in December. Some of the long-range models are suggesting maybe a start of the monsoonal flow starting, which would bring more moisture to the northern portion of the country, which has been very dry. But other forecasters aren't so optimistic that that model change is going to happen. So, this volatility in the beans due to the weather is probably not done yet.
But just the scare of maybe December being dry is going to keep some of these fund traders in that market, right?
I believe so. It's given them a lot of opportunity to trade it, plain and simple. And the fact is, the bean market is, the U.S. supply is very tight. Let's go with that route. But then you look at the world, it looks like it's going to be a little bit of a build out if South America has a big crop. But right now, they're about 10% behind planting in the northern part of Brazil. If they continue to lag, it should have a negative impact on their supply. So yeah, the funds are going to keep an eye on it. Meal, plain and simple. There's just not a lot of meal in the world. Argentina's out of beans. And, they need to get that Argentina crop planted as well as a Brazilian crop planted to, essentially get the South American supply building. Until then, that demand's going to come to the United States. So, that should be a little bit supportive to the meal market.
Yeah, and I know meal's been on a tear here with some new contract highs earlier this week. So that correction kind of spilled over into the soybeans. I also wonder, as far as the soybean market, did we kind of fade some of the export business that we saw again today and these strong weekly sales just because we already knew about them, or?
I think it was a classic buy the rumor, sell the fact. We were looking for very big sales today. They were just shy of a record. When you look at what was happening as China was very aggressive buying after they did that frame contract deal a few weeks ago and in front of the Biden G, conference they had yesterday. So, yeah, I think it was definitely kind of a buy the rumor, sell the fact. People are thinking now, Michelle, that China was going to be aggressive buyer. They do it before the meeting. So now that the meeting's passed, there's a little bit of fear that maybe China might be out of the market for a little bit at this moment.
Yeah. Now, surprisingly enough, corn went the opposite direction. So was that just a technical bounce?
That was probably the surprise of the day. I would say a little bit of a technical bounce. Technically, it went down and held the September lows. Early in the day, we found some fun selling, then they reversed it. I also think you saw a little bit of unwinding of the spreads where the funds in general have been buying beans, selling corn. It felt like you saw a little bit of a liquidation of that. Remember, the December options go off the board a week from Friday, the half trading day after Thanksgiving. And then a couple days after that, we got first notice day. So you probably saw a little bit of fun liquidation in front of those big dates.
Now, we held the October low, as you pointed out, but we also had a reversal earlier this week. Do you think we're trying to forge a bottom here?
I think we're trying to forge a bottom here, Michelle, but I think you can't get too overtly bullish. I think like on the December corn, there's a lot of moving average horizontal resistance right around that 480, 485 zone. I think if we can get through that, you might push your way up closer to 5. But the reality is when you're hanging on a 2.2, 2.1 carry out over the corn market, there's just no reason for corn to get over $5, especially near term. I think there's a lot of farmers, unfortunately, in a position where they've got to sell corn in the next 5-7 days, or they're going to get forced to roll those, HTAs or deferred pricing contracts out to the March. So if we would happen to get a rally between here and say first notice day, I think it would run into a wall of selling.
And do you feel like there's a few extra bushels of corn that we got above expectations that are hitting the market too?
It's definitely happened in the Eastern Corn Belt. Storage is a problem right there. A lot of our clients have been pleasantly surprised about the size of the crop. Storage is as a premium right now. Some elevators are only working half days. So yeah, I mean, it is forcing some bushels to market that producers essentially don't have room to store on farm.
Yeah. So the uptick in corn was also confusing considering wheat went the opposite direction, which we're used to with wheat, but that's still a function of these poor weekly exports today, or is it all technical?
I think it's more of the poor weekly sales right now. I mean, the wheat market's trying to put a technical bottom in, but we had those China sales a couple of weeks ago. People were hoping that we'd get more sales. We just have not gotten it. The dollar has weakened a little bit recently, and hopefully that will bring demand there. But that, the reality is, Michelle, when you look at the carries in the December wheat to the March wheat in Chicago, the funds that are just looking at that carry saying there's just absolutely no reason to get out of our massive short position at the moment. If you would see something happen that would shake them out, it could be a violent ride up, but it's just not there yet. Heck, remember, you had an attack on a boat in the Ukraine that actually killed a sailor, and even that wasn't enough to shake the wheat market out. So right now we are still stuck in a very bearish pattern for the Chicago wheat, at least.
Yeah, it's been surprising to see this market have such war fatigue, I guess I'll call it. We also have some forecasted rains for HRW areas. Was that another factor?
That just added to the negative tone right now. I mean, if you're not selling the product you've got and you start adding to the supply because we end up having a good crop this upcoming year. Now, granted, it's a long ways away, but just psychologically, you get rain as you're trying to get this crop planted or just getting it finished planted. It will add usually a negative tinge to the market.
Yeah. So cattle did have a pullback today, a pretty sizable pullback. So was that this lower cash trade that developed today, or some caution heading into this cattle on feed?
Well, I think you hit the two main topics right there. I think the first one was the cash. When the cash market was reported a little bit weaker, I think that started this selling pressure, and then it kind of accelerated it as the day went on. We do have a cattle on feed report coming out. I think people are very leery of the placement numbers. That placement number, obviously, in October surprised the heck out of the market. And we definitely, the report comes out on a Friday. You got to trade it on Monday. We had a violent day down on Monday. People are leery that could happen again here in November. Remind you, Monday, we are moving into a shortened holiday week. We trade Monday, Tuesday, Wednesday. We're closed on Thursday for Thanksgiving, a half a day on Friday. So I think you might have saw a little bit of just liquidation in front of that report, as well as the holiday trade.
Plus, is there some cattle hog spread action going on? It just really feels like when cattle pulled back, your hogs were going the opposite direction.
There's no doubt about it. I think that's what was going on. I mean, the hog market held in there pretty good. And normally when the cattle market and the feeder cattle market are getting beat up that bad, or in general, most of the markets, I mean, it was a pretty tough day across most of these markets, except for maybe the metal markets. And like I said, the hog market and the corn market, everything else was under pressure. So definitely a little bit of spread trading going on as well.
Yeah. And the crude oil market, wow, what a retracement we have seen. How much of a surprise has that been?
To me, it's been a very big surprise. I mean, we're about 20% off the highs, roughly, Michelle. And I got to admit, that's a little bit of a surprise with what's going on in the Middle East right now. I mean, that war is still going on. We're we're $6, $7, I believe, lower than we were when that war started. So we've taken all the war premium out. And, the fact is, when you look at what's going on, our American troops around the region are getting attacked and we are responding. So the risk of this war expanding, I think, is real. But for the most part, the market is taking a kind of a laissez-faire approach to it and not too worried at the moment. Instead, the storyline is they're worried about weak demand going into 2024, not just here in the United States, but as well as China. And I guess you could argue that that narrative is the one that's winning simply because of the price action.
Yeah, and I think we did see a little bit of a build in world inventory too, didn't we?
Yeah, if you look at the stocks report, we are building, which is definitely a negative sign. I mean, it's showing demand's not there. It is interesting here in Chicago. They've been talking about record amount of people flying for this Thanksgiving weekend. So, the narrative near term is we're spending money and we're moving about. We're going on Thanksgiving. Retail sales in the third quarter, for the most part, have all been very, very good. But it's that narrative of what's coming down the line. Fear of a slowing economy is definitely kind of percolating through at least the energy market.
Yeah, that's for sure. Although I, like you, have not seen much evidence yet of a recession. So, all right. Thanks for joining us, Jim McCormick with agmarket.net. That's Markets Now.